Hello, I'm Matt, and this is Stock Speedrun number 1 for the weekend of March 12th, 2022. Yep, we're still going strong with this. If you are unfamiliar with what a stock speedrun is, you can check this video's description for an explanation, and of course a disclaimer as to its content. Let's go. Digital Brands Group. They make digital brands, I assume, and they had a very interesting chart on... What the hell? What the hell happened on Friday? What the hell happened on Monday? What the hell happened on... Okay, no, that's kind of all that stands out. I do want to know what happened though. I assume it's this. Well, what is this first? Provides apparel under digital consumer wholesale. Digitally native vertical brand that sources products from third-party manufacturers and sells directly to the end consumer through its websites. That sounds needlessly confusing. Vertical. Is that like growing vertically integrated? That's when you have your entire supply chain below you, right? Or is that... There's vertical integration and then there's horizontal integration, I want to say? I don't remember what it's called. Alright, I think I'm just getting my terms and my concepts confused. You know what? It doesn't matter. Let's go see how they're doing. Apparently very well because they had a record 766% increase in e-commerce revenues for January and February of this year, I assume they're talking about? Luxury lifestyle digital first brands today announced its e-commerce revenue growth increased a record-setting 770... Wait. Was it 766 or 776? Make up your damn minds. Year over year for the months of January and February. That sounds pretty nice. Mr. Hill Davis, Chief Executive Officer of Digital Brands Group, stated this e-commerce result is well over our plan and illustrates the power of our portfolio model. Whatever the hell that means. Wholesale channels continues to significantly outperform with 200% increase year over year in January. Wait, was it 200 or was it 700? Or is this different? Our wholesale channel, as opposed to e-commerce revenues, I suppose that's different. What does wholesale mean in this case? Continues to significantly outperform plan with year over year in February. We are experiencing incredible leverage on results cross merchandise. I mean, I guess it doesn't matter, seeing as they're both channels are apparently doing significantly well. It would be nice to know what that's talking about. That might be something to look at for Phase 2. Oh, jeez, I am not reading this wall of text. When was this released? When was this published? Monday, March 7th. So that's what caused this jump on Monday, I assume. I wonder what this Friday jump was all about. Was it just because the hype was kind of still bubbling under the surface for this a little bit and people wanted to get in it for the weekend? Everyone's like, oh, shit, this is my last opportunity to buy this before the weekend because I have to get it now for some reason. I don't know. I mean, that's basically the thought process that goes through your average trader nowadays, I think. It's like, oh, I gotta get him before it's too late. It's like, too late for what? Oh, I don't know. How do you know when it's too late? Oh, I don't know. Yeah, so... Okay. This actually isn't that old. No, came out... Actually, you know what? Was this a SPAC first? I go back far enough, and I'm going to see articles about that. Announced its closing of $10 million initial public offering. And Harper & Jones. Yes, it was. It was this Harper & Jones acquisition. Well, at least I got it post-SPAC, so I actually have something interesting to talk about. That's nice. So when was this? Announced its closing May 18th. That's about when that chart stopped, didn't it? Yeah, May 18th, roughly. Actually, wait, let me understand this better. Closing of a firm underwritten public offering shares of common stock or warrants to produce common stock. Combined public offering price of $4.15 per share. Okay. Not quite. And warrants. Okay, I see warrants. Warrants are usually associated with specs. Although I'm going to be honest, I'm still a little tiny bit unclear what warrants are, but every time I hear the word and I look it up, it starts to reinforce itself in my brain. Prior to commissions and other offering expenses, companies' shares of common stock and warrants are listed on the NASDAQ capital markets under the DBGI, effectively. Acted as a sole manager after. Here's an explain. Public offering on Harper and Jones. Harper, was that the spec? I don't see it talking about Harper and Jones in here. That Harp is a custom-made and made-to-measure suiting and sportswear company that provides customers range of full closet. Wait, that's its own. LLC acquisition. Oh my goodness, no! Okay. Holy shit, I apologize. I completely misunderstood this title. I thought it was talking about going public through a SPAC company called Harper & Jones LLC acquisition. No. It is the announcement of the IP. It is the announcement of the closing of the IPO. And it also includes a separate announcement of an acquisition that they did of another company called Harper & Jones LLC. Oh my god. English is hard. English is really hard. Holy shit. Okay. Alright, you know what? Enough with that nonsense. I don't want to read things that I can't parse easily. Jeez. Okay, I wasted like 5 minutes on that because I couldn't understand what the hell it was talking about. Okay, so announces 37 revenue guidance increase from 350% from 2021. So you know something else that I just realized. So this is direct to consumer, digitally native, online kind of retail. This is about the time that you would think that those things would be, pulling back a little bit, right? Because, people are doing less shopping. I know that, it's 2022, and depending on who you're talking to, the pandemic's been over for a year now, but I feel like we're still coming out of it. And people are starting to, go out and buy things as opposed to staying home and buy things online. So it's equally more impressive, I think. I think it's reasonable to think that it's equally more impressive. Or rather, that it is additionally impressive that while that cycle is going on, these guys continue to see amazing year-over-year increases like that. So that's what I'm going to take from that. To create an apparel company juggernaut. Alright, something else I can point to here is that I see a lot of very amazing news. I don't honestly see anything all that negative. Channel to the Amazon Marketplace, financial results. Actually, let me look at this funny. First quarter and Mondays. Oh, what? Oh, no, wait, that's the announcement of the announcement. Announces LOI to acquire Elevated Basics brand stateside. What? They're doing a lot of acquisition kind of. For its first quarter here. This is the article that I want to see. Net loss attributable to common shareholders with 3 million or 4. So, okay. So they have losses, and I think I noticed up here in the chart. The hell. I could have sworn I saw an earnings chart. Wasn't there an earnings chart just here? Alright, that's okay. I think I know where to go to find that. That is... No. Yes? That's financials? I think? Yes. No, give me quarterly. Yes. Gross profit. Oh, actually, they've been well, I was just about to say they've been positive for the last 2 quarters, but something's fishy with the... Oh, no, actually, never mind. I got confused again. Negative, negative, positive, even more positive. If I'm reading this right... Am I reading that right? I would very much like to see a chart. That would make these numbers a lot more obvious. Digital brands. Digital brands group earned. Full revenue. Earnings estimate actuals by quarter. Quarter 1 of 2021 was minus 45. And that was actually the one that I just saw. It said minus 45. Yes. Loss of 455. But then it starts getting better. Whoa, what the hell is this? No, back to reading. I don't want to pay for your shit. And quarter 2 is better. In quarter 3, they actually managed to turn a profit. And wasn't there a quarter 4? Yet. Quarter 3, that was 4 months ago. There's a quarter 4. Emerging growth. Is there not a quarter 4? I don't know. Well, let me go take a look at this quarter 3. $2.2 million versus 1 point. Gross profit margin increased 96% year over year. Okay, let me try to coherently explain my thoughts right now. So, as I was saying before I interrupted myself, I don't see any negative news here, really. Nothing that be construed as negative. So I'm wondering, why am I not really seeing a whole lot of confidence in this chart? Sure, you see spikes here and there, but they typically don't hold, and overall the chart has a tendency of going down, and I kind of wonder why that is, even though they seem to be continually doing well quarter over quarter, and seem to be making some big moves to advance the business. They're making acquisitions. They are appointing fancy schmancy board members, and partnerships and all kinds of stuff. So why... I'm looking for a reason why this chart keeps going down, and I think I have a reason. It's very possible that it's not expanding as fast as people hoped it would. And let me explain what I mean by that. So you have a market cap here of 22 million. That's extremely small. But the money they're dealing with is also very small too, because you can say with this quarter 3, this is the first quarter where they turned a profit, but they turned a profit on, and it wasn't really that great of a profit, net loss of 76, hold on. Oh, it was still a loss. Wait, what? Where the hell do these numbers come from then? It said 1.2. Gross profit. Net operating. Am I misunderstanding what gross profit means on this chart? Because it still says minus 76. All right, forget these numbers. I'm gonna go based on what I saw here and what I saw here. So, okay. So actually, 2 things now. One, they have yet to turn a profit. I thought they did last quarter, but I was mistaken. 2, you're dealing with a very small amount of money here. 2.2 million. In fact, I kind of want to see how this revenue grows over time. So that's 2.2 million for quarter 3, which is not. I know 2.2 million sounds like a lot of money to you and me for a company. Not pocket change. Second quarter. Net loss attributed was share on revenue of $1 million. Our gross profit margin, net loss. Yeah. $1 million, $2.2 million. And that's in revenue. Even if they made a profit this quarter, the max you can do, which no company ever does, it's literally impossible to have a 100% margin or a 100% of revenue to be profit. That's just not how this works. You got to spend money to make money, you know? That's on 2.2 million. If you were to look at other companies where you compare the market cap to, or rather, you compare the quarterly revenue as a percentage of what the market cap is, I think you will find similar ratios. If you were to take that 22 million market cap compared to that 2.2 million of revenue, or even the 1 million of revenue in the quarter prior, and kind of scale that, if you kind of get what I mean, kind of scale that to larger, more conspicuous companies. I was about to throw out Amazon. Amazon might be a special case. I don't know if you can do it with Amazon. Let's think of something else. Let's think of what is something that is established that is in a similar vein. You know what? Wayfair might be a good example. If you were to scale those numbers up for Wayfair, I think you would find very similar percentages. In fact, Wayfair may even have a closer gap between those numbers because this is still an up-and-comer. So the future potential is priced in, if that makes sense. So that's why I can explain why it's gone down, because it may not be expanding as fast as people had hoped it would. Despite the fact that it does still be doing good, it's just doing good slower than people expected it to. That's my explanation as to why it has gone down more often than not and cannot hold on to any spike gains it seems to be reaching. That's gonna be what I'm going with for this. Now, how does that translate into one of these three options here? I think I'm gonna have to go with a hold. Because if they can't, I'm not going to say that they're going to fail to establish themselves and eventually make a profit. I'm not going to say that. But if it doesn't happen, if it doesn't happen quick, that chart may keep going down. And they are very close to, well, not very close. I guess close compared to where they started. They are very close to going below that dollar mark and potentially have to start do reverse splits. Which once that starts, I've talked about reverse splits before. If you've watched any of those videos, you know how I feel about them. Kind of like a death spiral once that starts. So that's kind of why I think it's a hold, because I think there's a good chance of it doing well in the future. I don't know, or not well. It's already doing well, but do better in the future. But I don't know how long you might be waiting for that. And while you're waiting, I don't know how much further it may go down. That's why I'm not giving it a buy. Obviously, I'm not giving it a sell because I think it can probably do well in the future. Only reason why I'm sticking with a hold is because I don't know how long that would take. And it seems like it's already taken longer than people expected it to, so it may take even longer than that. So those are my thoughts on Digital Brands Group. And I'll catch you in the next one, friendos.